What's going on? Good morning and welcome back to Trading Options Network. Today's been a little bit different than yesterday. It's not quite a big of a doozy as yesterday, but before we go ahead and get into anything, obviously we have to go ahead and get our disclaimer out of the way. Everything we discuss is solely for educational purposes only, as always, and is not the opinion of Trading Options Network, but solely the opinion of mine and mine alone. That being said, take this information and do with it what you will, but take responsibility for your actions. And of course, be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with Trading Options Network. That being said, as I had mentioned, it's not quite the same as yesterday. As you can see, there is not a whole lot of these big names, the Microsofts and Apples and Googles and Amazons and Facebooks and Teslas. They're not all deep red as they were yesterday. Okay, a couple are red, a couple are green. You know, Nvidia is on its way back down, and I would not be surprised if it does finish red. But in the grand scheme of things, the only one that's really down, that's kind of a big player here in the S&P, is Eli Lilly. And I was looking at it. I couldn't find any specific. I'm sure there's a reason out there for it, but I could not find any news articles out there in regards to Eli Lilly. I guess we can do a quick Google search. Let's see what we have here. Aha, here we go. New weight loss competitor emerges. Okay, so there you go. Let's see. The notion of a weight loss drug was a fantasy of many for a long time, but now thanks to drug maker Eli Lilly. Go away, I can't read. It's a real thing. However, Lilly wasn't the only one looking to land the market share in a market that was previously thought of as stuff of dreams, and one new competitor is on the rise. This sent Lilly shares down nearly 3% in Wednesday's afternoon trading. Okay. So apparently that was yesterday, but today is just continuing to move on down. Interesting. We could probably look more into that. Roche, RHHBY. I don't even know if they're publicly traded or if this is... Yeah, I'm going to assume they're not. Let's click on that. So, okay. Don't know anything about this company. I don't know what market it's in. But obviously we can't find it here on Finviz. Let's just go ahead and take a look and see if we can find it over here. RHHBY. There we go. Over the counter and other why can't I think of the name? Market. Other market. Okay, so interesting. I don't know what market it's in, like I was saying, but it does seem to be having a nice little jump there. I don't think it's going to really have a huge impact in the grand scheme of things on Eli Lilly. So I'm actually going to put Eli Lilly in my bull watch list because I want to see this bounce. I would not be surprised if we have a bounce here sometime in the upcoming days, but it looks to me like this is just setting up for a very, very nice entry point and nothing else. That being said, let's get back into what we're actually going to be discussing here. Let's get rid of these tabs. All right, so again, S&P gosh, Nvidia really is cranking down, huh? Let's go ahead and take a look at that chart real quick. All right, so it looks like it's recently, yeah, it's there we go. So came down, went up, came down, went up, going down again. If I was a day trader, I'd be all over this in terms of puts right now to see how low it can go. I mean, I wouldn't go absolutely crazy. It's not like I would put much more than maybe a trade or two in there. maybe one put or something like that, maybe a 1 week to expiration 115, or if you wanted to get really, really crazy and you wanted to do a 1 day till expiration put, but you want to buy it by like the 120, so you have more delta than theta. Just to see again how low it goes, that would be an option. But nonetheless, it does seem like Nvidia does want to drop a little bit more. But again, just like with Eli Lilly, I see this as nothing else but a good opportunity to get in when the timing is better, when the timing is right. It's not right now, obviously, but as soon as it starts looking like it wants to go back up, then we are going to go ahead and probably jump into this one. Same thing with all those bigger companies, the Microsofts, the Apples, the Googles. There's no reason not to think that these stocks can jump. Meta is only up 1%. I saw earlier it was up a lot more. Let's see here. Yeah, see it's starting to drop now as well, it looks like. Yeah, okay. So a lot of things, and this is actually interesting because a lot of these that had these big pullbacks yesterday gapped up, but they are coming back a little bit more. So all that means to me personally is that the market itself is not totally sold on the fact that we are not going to have a little bit of a pullback here. We could very easily have a pullback. We go ahead and pull up SPY. Okay, it looks like we are in the middle of a pullback, like a tailor-made pullback, honestly. This is exactly what we want to see. I mean, considering, again, from July 1st to July 15th or 16th? Yeah, July 16th. There was not a single day we did not make a new all-time high in the market. Well, I guess, technically speaking, these were not all-time highs. These were just green days. But once we got to that all-time high on July 3rd, then we did go ahead and continue making new all-time highs every day all the way up until July 15th. That is so strong that it's almost good that we're having a pullback, because if it were to continue that, it's going to destroy the market. I shouldn't say destroy the market. It's a little excessive, but it would absolutely have a much more negative impact on the market overall than just simply allowing the market to move on up here a little bit, and then have a nice little pullback now, so that when, the 50-day moving average can kind of come up and catch up to the 20-day moving average, let this kind of just sit here for a few days, kind of go sideways, let the 20-day kind of simmer down while the 50-day catches up, and then boom, we move to a new all-time high. That's very, very possible. Again, we are in an election year. Election years do bring a little bit more volatility, but usually to the upside. So I think we're looking great. I think we're looking great in terms of continuing this bull rally. It's unbelievable, don't get me wrong. And if you've been following me for any period of time, you know that I think we are due for a massive pullback, but I don't see that happening before the election. I just don't. I see it happening sometime after the election at this point. If we were going to have it, we would have already had it, so that, up and going into the election, we can have another nice rally. But again, I see this as maybe a couple of days of consolidation / pullback, and then boom, we'll move up to the next new all-time highs. So we're just sitting back and allowing things to do what it wants to do, and then we'll get into it. Now, SOXX is taking a little bit of a hit again due to the fact that the semiconductors are still hurting a little bit, but we did go ahead and roll it yesterday. So we have over a month now till this expires, and we have obviously a lot of time, and it's really, we don't need it to go up that much. Okay. So, I'm not worried about it in the grand scheme of things right yet. Now, if it continues to plummet, then yes, we're going to have to do something, and it's going to suck. COHR I wanted to talk about. Okay. Gosh darn it. Let me go ahead and change it to the finger. There we go. This, and gosh, just recently. Oh man, that really is unfortunate because we were right there, right at the line when I was looking at this before I started this call, but now it's taken a pretty big hit here. But we are getting to that point where we are going to probably want to get out of this position, even though we do have quite a bit of time till expiration. But we did, we don't want it to get out of hand. That's the thing. We don't want it to get out of hand. So I'm going to let's go ahead and do this right now. I'm okay with losing 50% on this. So I'm going to create a closing order. I'm going to sell this, but I am actually going to do it at a stop limit. And I'm going to put that limit at 510, which will be a 50% loss on this position. It still gives it some time to bounce. I'm going to put the stop at 525. That way, if it hits that stop, if there is a decently sized bid-ask spread, which let's go ahead and take a look at it, what it is right now. So it's about 30 cents. So 15 cents, yeah. That's about what I'm going to want it to be at. So if we hit this stop limit at 525, we are going to end up closing this for a loss. But who knows? Maybe it bounces back sometime next week, assuming we don't go ahead and hit that. But I'm going to go ahead and make sure I put it on good till canceled, confirm and send, and send. All right. So if it ends up closing, it closes for a loss. It is what it is. It's painful. There's no doubt about that. SOXX, this is another one, again, that we just done talking about. RCL. RCL is one I'm actually really, really excited about still, because even though it is red today, it showed some strength early on. And I think that if we go ahead and look at the day chart really quick, where is the 6 months? There it is. All right. We're still very, very bullish on this chart. Okay, we have a long ways to drop before I would say we're no longer bullish, and we have plenty of time on our longer calls, or I should say longer, but long calls versus our short calls. I like the idea of rolling our short calls soon, and we make even lower. I can't remember. I think this one was only every $2.50 though, if I recall. Yeah, so we're not going to be able to lower. I mean, we could. Oops. Didn't mean to do that. Come on, options chain. Close that one. We could theoretically make this what is called a calendar spread, where it is the same strike price. And if we look at the 167.50s for next week, that would give us, that's actually a really large bid-ask spread right there. But, they really widened out since this morning. My guess is the people are being greedy. Since the stock decided to go down, they still want to be able to sell them for a higher amount than they're really worth. But overall, if we were to sell, oh shoot, I'm looking at the wrong ones. Even so, I was looking at this as the 170 versus this is the 170. Regardless, I mean, if we can get like a $2.50 a premium for the 167.50. And, let's see it bounce back up to that range, roughly speaking, by next week. And then we could potentially roll them back up to the 170s. That's a great plan, in my opinion. I still like RCL to move up higher in the next few weeks. In the upcoming weeks, there's nothing to tell me right now that it's going to end up turning bearish or anything like that. Again, we're in a pullback in the market. It's going to happen. Now, it sucks. It sucks a lot because if we go ahead and look at our account, right now we are back to negative from where we started a couple weeks ago. So it's tough because obviously last week when the market was just on fire, we were up, 5%. And, that's great. That's fantastic. But when the market starts to shift like this and has a pullback, unless you're positions, which unfortunately we did have a couple of positions that were expiring this week. We had to roll the SOXX one. This is options expiration Friday, tomorrow. So anything that was a monthly, like the SOXX ETF, for example, we had to roll. We had a couple others. I know McDonald's was one that we closed earlier in the week. Excuse me. But nonetheless, when this happens, it sucks. But again, in the grand scheme of things, the market is still very bullish. Okay? You cannot deny that the market is still bullish. Are we going to have a deeper pullback? It's possible. It really is. In which case, once the market tells us, hey, it's time to get more bearish, then that's what we'll do. But until that happens, look at this. This market has been on fire. And just because it's having a pullback does not mean that you should suddenly start panicking and go bearish. That's exactly what happens to a lot of retail traders. They think, oh my gosh, the market is falling apart. Let's go bearish. And then boom, the market starts reversing again. And it's just weeding out all these retail traders. Until that happens, until we have proof of that happening, we have to stay on our path. So all of our longer positions that we have right now, the SOXX, the RCLs, all of those we have to stay put with. ALB, if we go ahead and pull up that chart, let's get rid of this one, pull this one back up. Oop, there we go. All right, so ALB is another one where, again, when the market is having a pullback, a lot of bears will actually look more bullish. And that's what's happening with ALB in the last couple of days. And that's because it's getting money that has not been getting recently, due to the fact that a lot of people are selling off their winning trades, they're profit taking, and they're looking for new opportunities. ALB is at lows right now. That's lower lows than it's been for a while. Oops. So, the only thing we can do here, before I actually get into that, keep in mind, ALB is very heavily shorted. There's a lot of people that are expecting this to continue to move down. So again, look at this. There's no reason to believe that we're not just going to continue moving down. ALB has not had any good news. It's actually quite a bit of bad news. But a lot of people are putting money into it because it has not seen these levels in a long time. I shouldn't say if ever, because obviously it has at one point. But people are trying to time this and thinking it's going to be the bottom. So it's getting more money than it normally gets. More investing is coming into this particular chart than normal. Ultimately, I think this continues to roll down and we'll hit that $90 level. So I'm not worried about this one at all. I debated again when we had a little run up earlier this morning to go ahead and, close a few of our short legs. But the premium is still way too high in my opinion. We have not earned enough premium to really get full advantage of that. Now, if these were around a quarter, not 79 cents, if they were around a quarter, I could justify that. I could totally justify that. But when we're only, 45 cents, 46 cents into profitability per contract on these, it's just, in my opinion, doesn't make sense considering we have a long ways to go for them to get in the money. So I truly believe that we will, if we just hold these until expiration, it'll ultimately go down to becoming worthless. And we can only hope that our 95 puts will be further in the money. We bought them for $3.15. So the break even on these 95 puts would be, what would that be? 95 minus 315, so 91.85. So at 91.85 will be in the money, right? Or I shouldn't say in the money. We'll be in the money once it crosses below 95. We'll be in the green once it hits our break-even point of 91.85 and goes below that. So as long as we are below 91.85 and above 90, then we will be quite profitable on this trade still. Now, I would love for it to continue to move down past that. Oh, excuse me. I had a nice big yawn there. Sometimes you just need those. I would love for it to go past 91.85 and just continue to plummet. Do I see that happening by next Friday? Very easily could. I mean, we've seen the volatility in the stock this last couple of days. I mean, yesterday it had CC. Let's see. Its current ATR. I don't have that one up right now. Here, I'll pull it up really quick. Actually, I'll do it on Finviz. It's just easier. All right. ALB. Oops. There we go. ATR. And save. All right, so this has an ATR of $4.75. That means it can literally hit $90 in 2 days. 2 trading days. Okay? That's a big ATR for a stock that's under $100. So it has a lot of volatility. So we could very easily hit $90 by next Friday. I would love for that to happen. Oops. Get rid of that. Don't worry, there's nothing on there that was super informative or information that I don't need to share. That was all this stuff right here, just on the Excel spreadsheet. But again, I like where we're at overall. I know it looks painful right now, and it looks bad right now. That's obviously not right. We're not down $7,500 today. Again, I don't know what's going on with Thinkorswim's paper trading stuff, but there are obviously some glitches going on right now. But again, all I can say is what I've been saying the whole time is we just kind of have to stay put and allow the market to do a small correction. And if and when it decides to show that it wants to be bearish, then we'll go ahead and start transitioning. I'm still bullish. There's no reason not to be bullish still. It's just a small pullback that the market is experiencing. No need to panic yet. And ultimately, I think our trades are going to be just fine. So take a deep breath. Tell yourself, it's just a couple of days. We're going to get through the pain. And that, truth be told, that's what makes a trader a good trader, is not allowing their emotions to get into it. We are talking about money here. Okay? My personal account is not looking great right now either. Okay? But again, if we let our emotions take over, then ultimately we are going to lose our butts. Okay? This is not meant to be an emotional way to create income. Okay? If you become emotional, your emotions will get the best of you. I can almost promise you that. Now, maybe you'll get lucky one time or another, but overall, your emotions will get the best of you, and you're going to be wondering what happened. And what you should have done was just ignored your emotions and just continued to do what the charts are telling you to do. Right now, the charts are saying we're in a pullback, but don't be alarmed. It's just a good entry point. I really enjoy pullbacks in the market in a bullish economy because, again, it does give you great opportunities to get in at a better price. You're not chasing stocks. I also like rallies and bear markets for the exact same reason. Okay? When they're occurring, again, it may look painful in your account, but in the end, it is only going to be for your own good. So NVIDIA really just took a dump. It is now down 1%. So again, if I was a day trader, I would have been all over that. In fact, I might just do it just for fun, see how far down it goes. But I'm not going to do it if anything crazy. But in the end, again, we're just going to go ahead and let the market play out. And then once the market does decide to go ahead and start moving back up again, that's when we get into positions, and that's when we make our money. So until that happens, probably not going to see any trades. and that's fine. Holding cash is okay. So I don't really have anything else for you guys at this point. I'll come back in a couple hours, see where the market's at. But again, don't expect anything to change from now until then. Talk to you guys soon.